We are all set. Perfect. Thank you so
Great.
much. Yeah, really excited to speak with you here. You're a massive fan. I'm sure you hear it all the time, but just really excited to be speaking with you. So thanks so much. We're excited to have you on Benzinga and do the article as well as put you on the YouTube channel too.
You may want to cover, I made a move this week into Bitcoin. I took a lot of
Yeah.
flack in social media. I've raised my allocation to 3% of the portfolio. I finally did it. Well, anyways, you can bring it up if you wish.
No, it's actually funny. That was the second question I had on here. So great.
Yeah.
Yeah. So actually, if you want to jump right in on that, Kevin, you did talk about the Bitcoin and the move into the ETF and 3%. What was the motivation for it? And if you want to talk about that social media flack you caught.
Yeah, I mean, I've been on the record for the last couple of years regarding Bitcoin, and the reversal I've made is because the regulators have done the same. And so I'm in a highly regulated environment. I'm a chairman of O-Shares. I have many investments in financial services companies. I am very compliant, and I make sure all my companies are that I invest in. And the regulator was not on board for a crypto or for Bitcoin. And so when the Canadian regulator allowed for an ETF, and of course I know the ETF space very well, and the Swiss has done the same, and many other regulators around the world all of a sudden have started to open up the dialogue, at least on Bitcoin. In addition, you started to see S&P 500 companies allocate to their FX, their currency portfolios. Well, that was a time to make the change for me, because I've actually owned Bitcoin since 2017, but really never been able to speak about it. And so now I'm taking my allocation to a 3% weighting, because I also own Swiss francs, I own euros, I own British pounds, Canadian dollars, American dollars. I mean, these are part of my portfolio. And so not to have crypto makes no sense when the regulators are opening up. Now, in deciding how to own it and maintain it at 3%, I won't be using an ETF, actually, because I want to make sure that the coin I own is mined ethically and sustainably, because I don't want to buy coins mined in China for a whole bunch of reasons. And I certainly don't want to buy coins that have been mined where they're just wasting electricity and they're very inefficient. And so what I'm doing now is starting to approach companies that mine coin and forming relations. I'll invest in their businesses if they can assure me that the coin is produced in a carbon neutral fashion or close to it.
And one of the things too, it's just I think that's a great example of you saying that not all coins are created equal here too. It's not only the ethically way they're doing it, but the returns as well to it. What is the process behind determining which ones are the ones of value out there?
Well, of course, they're on the blockchain. You can find out when they came into existence, but you can't know that they were mined inefficiently. You don't know that. So you have to, if you're going to say, I'm going to start amassing, a wallet of coin or your own coin, you have to know how it was made and where it was made. So I really, it makes no sense to me to put up servers and air condition them 24/7 using electricity when you can set up a facility in northern Labrador, for example, or the top end of Sweden or Denmark or Iceland, where you don't need air conditioning. Why would you waste that electricity? How stupid is that? So I'd rather just go to those miners and say, guys, you need capital, I have capital, let's form a relationship. Maybe you, every time you mine a coin, I'll buy you another X number amount of capacity. I'll invest a few $1 million with you, and then I'll take a royalty on every coin. I love that word, royalty.
Absolutely. I was waiting for it to come up. And one of the, aside, not to move too far from crypto, but another exciting venture that you've been also in for a little while now is psychedelics and
Yes.
plant medicine. What was it about the space that really piqued your interest and got you involved in MindMed?
So MindMed is a really interesting story. I had been approached countless times to invest in cannabis, and I can't do it, again, for the regulatory reasons, because there's something called the RICO statute. We do not have every state on side with recreational cannabis. And so you're aware of that. Yep. It's still a Schedule I narcotic. Maybe that changes federally, but there are many lobby groups like Mothers Against Drunk Driving, which are not on board for that. In Florida here, we don't have that. And so I can't be involved in a commodity that if it crosses state lines, breaches the RICO statute, and I'm a shareholder of the company. That's just not going to happen. So, I'd never invested in it. And then along comes J.R. Rand, I mean, a really interesting guy, and comes to me and says, look, I know you're not going to do cannabis, but how about you invest in my business? It's going to do LSD research and psychedelics and psilocybin and 18-MC. And I said, what are you, crazy? like I already said no to cannabis. Are you out of your mind? And he said, no. I am going to do FDA-approved clinical trials to see if we can solve for depression or anxiety or opioid addiction, these massive problems where I know with certain, because I actually, I know with certainty there hasn't been a new drug in 25 years, and there's Adderall and Ritalin and all these horrible drugs they pump into kids. But he's actually talking about something really revolutionary. And he said, look, we will never do recreational drugs. That's a mandate at the board level. So fund me and take this journey with me. And I got to tell you, it was so striking, a proposal, that I gave it to my guys that do a lot of due diligence on the private deals we do. And they came back, a month later saying, we like it. And that's when it started. It was a couple of years ago. And I could have never, in my mind, the way you invest in something this different is you need diversification. In other words, if you just bet in one molecule, if you're only doing research on psilocybin, that's highly risky. You want to find a company like JR's where he's doing multiple trials, multiple molecules, so that you don't know the outcome. At least you have diversification of risk. And MindMed to me was the leader in that. I had no idea that this would happen, but I was involved very early. And it, in fact, has been the very best investment last year in my portfolio. Who knew? But Excellent. The point is, there's so much interest in this space that there's other companies that have come in, billions of market cap has been created, hundreds of millions of dollars have been raised, and the trials look really interesting because the outcomes could be fantastic in solving these huge societal problems.
Absolutely. And, with the advancements in the research and proving the efficacy of them, we're starting to see a competition between which might be more legally accepted soon between psychedelics and cannabis. Hypothetically speaking, if cannabis were to be approved on the federal level, do you think we could see some involvement from you down the line?
Well, I've done a lot of research in cannabis, and I can tell you one thing that I'm perplexed about. And if I was going to take a position in investing, it'd have to be resolved. Growing cannabis, which is a weed, in an Arctic climate sounds like a pretty stupid idea to me. When it costs you so much to grow it, because you have to do it, in a hothouse and hydroponically, when you can go close to the equator and get 5 to 8 crops of the same quality commodity. So why would I invest in a frozen wasteland? Why wouldn't I do it close to the equator? I mean, if you could resolve that for me, yeah, and it was federally approved. I prefer to go on the medicinal side of the equation. I don't like recreational drugs because my wife won't allow it in the house, even if it's legal. She just doesn't care. And I don't want to, that old adage, happy wife, happy life.
Absolutely.
I'm definitely not going to cross her on that one. And so it would have to be a medicinal play, but I would be happy to do it, but I just don't get it. The cost economics, like you gotta look at it. It's crazy to grow it in Canada. You grow it in Colombia, and then you use Canadian technology or whatever it is, whatever company's got it. So that's my one thing. So far, I haven't touched it. I'm glad I haven't, because it's lost 80% of its value for the very reason I just detailed.
Yeah, absolutely. And, I think that's a big telling point is, there's a lot of things, be it cannabis, crypto, psychedelics, or other areas where a lot of people are excited, and, inexperienced investors want to go really heavily involved into one of these markets. And obviously you're a big proponent for diversification. So what would you say to people that really want to be gung-ho about one market, be it established or an emerging space?
The thing is, I'm a big believer in diversification and spreading your bets, because you just don't know outcomes. But I love to be on the cutting edge of new ideas, and many investors, do. So the way I do it is I say, okay, is that a sector that we want to be in for the next 5 years? You don't have to marry it forever, but it's emerging, it's new, it's exciting. Let's go meet all the management teams, because there's usually 3 to 5, leaders, and then find the team that you really like. And I don't do 10 deals. I do 1 deal, but I take a very large position. After I find the CEO and the chairman and the board that I really like, I buy up to 9.9%. I don't want to go past 10 for a bunch of reasons, but I take a big stake, and then I back them, and I sing the merits of why I made that investment, because I want to support the company and the management. And I do that across multiple sectors, and it's really worked for me. The key is to find the right team. I've learned this from the Shark Tank days. All those companies I invested in the last 13 years, you got to find the right horse and the right jockey. And when you do, you pour gasoline on that opportunity. You take a, close to 10% position, so you have some real, meat in the game or skin on the game or whatever you want to call it. You have something that's material to you that actually get up in the morning and you care about. And that's how I do it. And that's, I would tell anybody to do it that way.
And, speaking of your Shark Tank deals, I think a perception from the TV viewer might be Kevin O'Leary is very bullish on the royalty deals, and these are how his entire portfolio is set up. And the opposite is you have a pretty conservative setup outside of Shark Tank. Can you kind of elaborate on the differences between those two approaches?
Yeah, when I invest in Shark Tank deals, I'm investing in nascent situations, startups, highly volatile, highly risky, love the product, love the entrepreneur, don't know the outcome, just don't. And I have, 30 plus at any one time, more than that even, of those kinds of companies. And I have a great team managing it at O'Leary Ventures, a guy named Alex Kenjeev who does that. But when I make a big bet, we're talking millions of dollars, I'm more conservative. I really want some infrastructure. I want, a sector that I think I can stick with for 5 years that I can invest more in. It's not as nascent and risky, and it's sort of a difference in philosophy because I'm putting, significant portions, a 3% weighting in my portfolio to crypto, for example, that's a ton of money. And so I care. I want to know how I'm doing it and how I'm going to maintain it and what the plan is and everything else. Putting 500,000 into a Shark Tank deal, it's, I don't want to lose $500,000. Don't get me wrong, but I do, and I can. It happens. But luckily, I get enough winners that offsets those mistakes. And Shark Tank deals are getting bigger. I mean, You just look at the deals because the show is getting so big. The old days was 50,000. Now it's 500,000. So it's, it's getting to be serious.
Yeah, it's the evolution of watching the show. Previous early seasons, you're seeing people not have their numbers in order. They're getting chewed up by you guys and actually having a learning lesson on the floor. Now it seems like you've educated a wave of would-be investors and entrepreneurs to make sure they have all their numbers in line before they talk to people like you.
Well, I'm more than proud of that. I mean, when a 9-year-old runs up to me in an airport and says, you should have done a convertible debenture deal up 20% last night, I'm saying to myself, how is that possible that you would know what that is? And that's the power of Shark Tank, that she would actually want to learn what a convert is, when half my staff don't know what that is. And so it's really, I'm proud of it, and I think it's fantastic. And I can't say enough great things about ABC and Disney and MGM and Sony and all the people we work with, that incredible family. I mean, I mean it. I mean, I've been with these people. I started Shark Tank, I had hair. It's that long ago.
Well, it's been a great impression you've made, and we don't like seeing the hairline receipt, but everything else that you've given us has been great. So another area though too, not just Shark Tank where you're educating people, is Beanstox. I saw the motivation behind that was the hundreds of millions of Americans that are completely out of savings or just operating on a month-to-month sort of basis. Can you elaborate on what motivated you to get involved in that and how Beanstox has been doing to mitigate the issue?
Yeah, this started a couple of years ago. A part of the Shark Tank mandate is financial literacy. So we would go to high schools all across the country. We'd pack the place, Cuban and I, Damon, Lori, Barbara. We love doing it. We can't do that anymore, obviously, because of COVID, but we do it virtually. And what I learned was we don't teach anybody about setting aside something for their retirement. It's, we teach them everything else. Even in college, we don't teach them. We don't teach them how to invest and how to become investors and how markets work and how you have to set something aside. So when you turn 65, you have something to live off. And so that was the motivation of Beanstox. And what I learned in the process of developing that whole scenario was how you got to make it really easy, because what you're talking about is trying to take $100 a week. Everybody can save $100. Just don't buy those extra jeans or whatever it is, and change their behavior, and just on your phone, stick it into the app. And so Beanstalks is a robo-advisor. It's really simple to use, and yet provides you with an indexing platform that gives you exposure to the markets for the next 20, 30 years, 40 years, if you start when you're 18 years old. And if you put $100 a week aside, you'll retire, if the markets do what they've done historically, close to $1.5 million, which I think anybody can live off. And so the average salary being, $55,000 in America, you really got to think there's a way and a will to put $100 aside. And I'm very proud of what we've done here. We've got thousands and thousands of people downloading it and setting up accounts and getting to work. And I can't shout out enough about it, because I really believe in what it does to try and help you de-risk your life. And it's really about changing your behavior. You've got to take $100, put it aside, for, as they like to say, forget about it. And that's what you should do. I don't mind day trading and all that stuff. That's great. But when you win something on a day trade, take 10% and stick it into Beanstalks and put it aside for yourself down the road.
Absolutely. And, I'll get you out on this. One of the things that really stood out to me when reading about you over the years is, your motivation for your investments, you always say, is going back to your family and making sure that they have a great life and things like that. What do you say, to someone who wants to, chart that similar course? What type of investment strategy do they need to take? What do they need to keep in mind when, navigating the waters of investment over the years to help their family?
Well, I learned all of that from my mother. She was, of Lebanese descent. I'm half Irish, half Lebanese, and her family came over and set up a winter clothing factory for children. And their clothing were made, and she worked there, and she was working in the accounting department. And what she did, they used to pay them once a week in cash back then. We're talking about the 50s. And she would take 20% of her pay, long before she had me or even was married, and started investing. And she bought S&P dividend-paying stocks and telco bonds. Yeah, she used to say people would turn off their heat before they turn their phone off because they like to talk so much. So she bought the bonds of the telephone companies of the day. When she passed away, I got a phone call from, the lawyer, and said, "You're the older brother. You're become the executive of her estate." And I went down there, and he said to me, "Your mother died a very wealthy woman, and she kept this account secret from everybody, both of her husbands. Wow. She was married twice." I called my brother and said, "Shane, you cannot believe what Mom's got here. 50 years of dividend appreciation and stock appreciation on those dividend-paying S&P companies, and 15 years of telco bonds that back in those days are making 6%. She was doubling her money on those things every 7 years. The proof's in the pudding. So that's my investment philosophy. You go long-term, you go quality, you go, dividend-paying stocks, and just a compound interest that she created. She put me through college. And when I graduated my last day of college, she said to me, "The dead bird under the nest never learned how to fly." And I said, "What does that mean, Mom?" She said, "No more checks. You're done. I've paid you from birth to last day of college. No more checks." And I went, "You must be kidding. I don't have a job." She said, "Go figure it out." And what she was doing there was no entitlement. Like, it's no free ride. And I've done the same thing to my kids, exact same thing. My generational skipping trust provides from birth to last day of college, and then they're on their own. And luckily they figured that out. But it takes care of their children. Same deal. Kids are expensive, full ride until last day of college, whatever last day is. She taught me so much about investing, and just the philosophy of no entitlement for your kids, and this idea of setting aside some portion of your income your whole life, and then, at the end of your life, having it there to de-risk your life. That's the key.
Absolutely. Well, her strategy paid off, and yours obviously has as well. And now you're spreading it to all over the world. And we thank you so much for it. Kevin O'Leary, Mr. Wonderful, it's always a pleasure to be speaking to a great mind like yourself. Thank you so much for taking the time, and you have a great one. And hopefully we can cross paths again soon.
Thank you so much.
Thanks a lot. Have a good one.